Hey folks, welcome to Pro Trader Strategies Market Commentary for Thursday, August the 29th. Yep, my name's Eric Wilkinson. You may recognize me as the Wolfman from mainstream media, but we're here to learn about options in trading, so that's what we're going to go with. But one thing I have to say is, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with some economic data. Not really anything across the pond, really. We did get preliminary CPI out of out of Germany, coming in at negative 0.2%, was expected to be a negative 0.1%, so it missed by a tenth. Flash CPI out of Spain, a tenth of percent lower than what was expected, really. So, and who looks at Spain anyway? All right, back here to the United States. We got our preliminary GDP quarter over quarter in line with expectations at 2%. Trade balance better than expected, only negative 72 billion, expected to be a negative 74 billion. A lot of that may have to do with the tariffs. I don't know necessarily. I didn't dig into that number. I don't think it really is that market moving of a number. We did get preliminary wholesale inventories in line with expectations at 0.2%. Price index for the GDP in line with expectations at 2.4%, right where they want. Unemployment claims, again, in line with expectations, 215,000, expected to be 215. Now, the one thing that we did get that is not looking too great was our pending home sales. Negative 2.5%, expected to be a positive 0.1. And we are in the season where people are buying. We get past Labor Day for the most part, and we're going to stop seeing that demand for houses because a lot of people will make that move ahead of the start of school, right? Get to the place where they are going to enter their kids in that district. Now we're starting to see that slow down. Also in the wintertime, pretty hard to sell a house just because who wants to go out and go open house, driving around looking at open houses. All right, so that's about it for the economic data. Natural gas storages, drawdown, 60 billion cubic feet, expected to be 55, so that increase shows lack of demand there. All right, on to crude oil. They're moving higher a little bit today, 50 cents. They did get above this little purple line, but remember, we're looking for that to happen at the end of the day, and I think the more that we kind of bounce in and around these points of control, since you can see that we have two separate points of control here, that we are going to maybe bounce in and around that area for to fill that in. That's what we see a lot of times happening when we get that move right here, is we start to see the market want to fill in some of this area here to create more of a bell curve. Or we could just see that the market wants to trade here and we'll get this paradigm move up. That would indicate more of a bullish price being accepted higher, and then that would kind of influence prices to the upper 50s, where I would like to see them near the lower 50s. I'm a little bit biased in the fact that I'd like to see those lower prices because that helps the economy, and when we're in an economy that's in flux, that's what we need to have happen. All right, gold kind of slowing down up here. We're seeing a bit of a pullback, but most of it is probably just a sector rotation out of the precious metal and into equities. We can see here bonds down a point. It doesn't really correlate to anything. You would expect actually the bonds would start to go higher with those numbers that we saw on the pending home sales. That's a pretty dismal number. And one of the things that I've talked about is that, despite the fact that I think that the Fed overdid themselves to the upside, I was talking they should have stopped increasing interest rates when they were about 1.75, even begging for them to stop at 2%. That was when we were heading into the holiday season, right? I said, why would you want to crimp spending heading into that holiday season? Well, then, we got to a point where, it was maybe a little too high, but the economy was still doing well. And then they started talking about lowering interest rates, which I was against again. Why? Because we've gotten these interest rates to a point where people started accepting that as value, accepting that as the new norm. And it wasn't going to influence it as much. And yeah, if we had a problem with spending and stuff like that, and we needed to loosen the purse strings, then that's when we should start lowering interest rates. Well, what's happened is people that were on the sidelines or actually were waiting and waited too long and maybe thought, well, maybe I missed my opportunity. Interest rates are going to continue to go higher, started looking for mortgages and new homes and stuff like that, getting them off the porch, if you will. But now we're starting to see, I believe, everybody's mentality is, I don't want to lock in a mortgage at this level. I'm going to hold off. Well, that's what I think is starting to show up here. Finally, the retailer or the consumer has seen that interest rates, or has heard interest rates are going to go down in the future. So why lock in a rate higher than where I could get later? And I think that that's a product of what we're seeing there, and not the look we want to be giving. All right, VIX coming off because the equities are moving higher. We can see the Dow Jones jumped. It's up 300 points on the day right now, actually making new highs. You know, once we got above this Fibonacci, the 23 Fibonacci, we've seen that we've let the dogs out and we've gotten that pop. Starting to see that move paradigm higher. But again, we have not gone anywhere. As you can see, we are still stuck in basically a pretty tight range here with the equities. And we can even see that show up even more when we go over to the E-mini S&Ps and the NASDAQ. You can see we're still within the area of the Fibonacci's that we've been talking about, the 78 here and the 78 and the 61 Fibonacci's. So we are stuck between these two lines. And despite the fact that we have gotten all of this move that everybody's talking about, oh my gosh, it's all over the place. No, we really haven't gone anywhere. And I wouldn't expect it necessarily to change anytime soon. I think we'll lose a little bit of momentum here as something else comes out to throw a wet blanket on this market. E-mini S&Ps up on the day, 32 points, near the highs. But again, we are stuck within these two value areas, in between the value area and the Fibonacci, really. But the 23 and the 38 Fibonacci's, you know, it's going to take a little bit of oomph, something that is very bullish to really break us out of this range, I feel. So for the foreseeable future, I think we're going to be bouncing around until we hear something. All right. One thing, though, to note is overnight inventory, we can see, has gotten very long in the tooth. No real attempt, maybe a slight for a couple of minutes there. We got a bit of a flush out on that and a pullback, but it did not flush out those longs from the overnight. It is still overnight long to the upside. So because we haven't seen that flush out, the day session to try and flush those guys out, the market would lean, in my eyes, towards the bullish push in equities going forward right now. All right, so let's talk about a couple of other things that we've been discussing. You know, one thing I say all the time is anybody can teach you how to trade or how to build an option strategy. They can't teach you how to implement it. And I just saw this article yesterday, and it is on CNBC, where they were talking to Kulo or whatever this guy's name is, and he is a pretty he is on CNBC all the time, right? And he's talking about how most of the talking about the trade, and earlier today we saw that the 280 calls, blah blah blah, and this guy is going out and buying calls in Costco with high implied volatility. As a matter of fact, it was in this higher 60s. You know, you also get this little doji here, but he's talking about chasing this trend in Costco to the upside. You should go out and buy those 300 or the 285 calls or whatever he was talking about. and get involved in this bull run. You know, you got to jump on board right now. Well, what do we talk about? If you have a bullish assumption, you need to increase your probabilities of success. And that's what I try to teach, is how to increase your probabilities of success by creating and implementing this strategy the correct way in and around the environment that we see. You know, if it was low implied volatility, I would have no problem with a bullish assumption going out there and buying calls. But you can see we have high implied volatility in this stock, and if you have a bullish assumption, you should be selling puts. For one, you don't have to be directionally right in order to make money in that type of situation. Two, you aren't paying, even if you got the directional move right with those calls that he was talking about, with this volatility we're even seeing come out right here, right now, just in the past couple of days, we've gotten about a 7%, maybe a 5% decrease. Well, a 5% decrease in volatility on this particular underlying would cost you about 50 cents. All right. Well, that 50 cents is about $1 move in Costco. So already today, those guys have lost on the directional move and the volatility coming out, all being those guys don't know how to implement a strategy to save their life. So that's why I talk about, don't watch mainstream media. Don't even read what these guys are telling you. Yes, they've gotten on TV for some reason, and I don't know why, but they're on there and talking about calls and puts like they know what they're saying. They really don't. And that is proof in the pudding why you should stay away from following or jumping on board, limiting off the cliff with whatever they say because they say it. All right. We know how to build strategies here. And more importantly, we know how to implement those strategies correctly to increase our probabilities of success. I could have this bullish assumption right now and have sold those puts. I would have seen the volatility come out, and I would already have started to see the fruits of my labor because I know how to implement it, and I'm not listening to those guys on mainstream media. All right, anyway, enough of my soapbox. We're talking about 3M. I only put this trade on 2 days ago. We got the directional move. We've got the volatility coming out of us. Yes, it's a little bit different than that Costco, but the fact of the matter is the volatility coming out really helped us as well. Yes, we got this big jump this morning, which was good, and we were able to get out of it. That's what I talked about yesterday. We got a little overextended to the downside outside that value area. Weren't seeing a lot of participation down there with volume. That led me to believe we were going to get a little bit of a pop back into the value area, as long as I even talked about getting above the 9-day moving average here. And you can see we popped above the value area low. And then also we've got this 9-day simple moving average right here on this blue line there. You can see we jumped above that. So popped above that support level. That is a little bit bullish going forward. But all of the things that we talk about on how you implement a strategy correctly to increase your probabilities of success worked out in our favor here. So in 3M, I went into the September, sold the 145 puts in there for $1.07 the other day. Actually, $1.07. I was able to get out of those this morning for 48 cents. All right. 46 cents on that trade. I put it in as soon as the market opened. You actually could have gotten a little bit better pricing. I think I saw it like almost trade 41 right afterwards, but I'm not going to count my pennies. I wanted to get out of the trade, 50% of my max profit. So I was able to achieve that. That fits our rules, right? That's how you increase the probabilities of success. I try and write it out for the other 50 cents. We could be back down trading at 153 tomorrow if something comes out, right? I do believe we are going to see this market migrate back to the point of control, which was my whole thesis of getting involved in this. But I am not going to let that play out because I've already beaten the probabilities on this strategy. So I am out 2 days, 50% of max profit. What better could you ask for? All right. Feels like I almost didn't take any risk. Yesterday it pinched me a little bit, but hey, you know, we started seeing that volatility come out that got the directionality wrong, and it wasn't hurting. So the volatility coming out and my directional assumption being wrong offset one another, which helped me with that strategy. Keep my powder dry, which is what I always talk about. That Costco trade, had you sold puts, you'd be able to keep your powder dry today. Now this guy's got this bullish calls out of the money, and the directional move starts happening. We almost start seeing a confirmation of a top. Well, those guys that bought those calls are probably pretty itchy finger because they're getting the directional move wrong and the volatility coming out. And, you know, they know that they are in a corner. Whereas if we were selling puts, we'd see the volatility coming out, and that could be offsetting our directional assumption being wrong. All right, so pooey to those guys, and let's really learn how to trade options. And having said that, get on my webinar today. We're going to be talking about directional strategy or non-directional strategies, in that we don't have a directional assumption. There's a lot of times we don't know what direction something's going to go, but we have a feeling that this market, like the equities, have kind of settled down for a little while. I've talked about this for weeks. That's what I've expected. We're starting to see that. Now I'm starting to lean towards, there feels like there should be something down the road that's going to get a catalyst to get this thing to pop. It's just been too quiet for too long, and it is an opportunity to take advantage of a big outside paced move that we haven't really seen recently. Yeah, we've seen some big moves, but again, we've just stayed in the same area. I'm expecting that to start to change probably heading into next week, okay? So we'll be looking forward to that. But check out my webinars at Pro Trader Strategies, and follow us on Facebook. Give us a thumbs up on this video so that you know, other people that you know get some traction with it as well. That's all I got. Other than, you know what? If you can't take that, take it easy.